Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun, looking at charts and going over options data. And so this is week 8 of the highly regarded options theses series. And so I am just going to go over basically, my theses on all of these tickers that are here in the list. I'm not specifically going to focus on the contracts that are there because I'm just going to try to look at the data, that I do find using unusual whales, looking at the chart and just kind of, seeing which ones of these look good. And before I get into the tickers, I just want to do a brief little introduction, really just going over everything that is here. And so first, I just want to point out that this is effectively just a trading journal documentation. So this is my personal documentation of my trading. And this is for educational purposes only, or, just for fun. And none of this is financial advice. And I should note too that, I am learning how to trade options in this series. And so some, if not most, of these trades will be bad. And I would say that most, if not all, of the contracts that I go over will be going to go to zero, because options are very, very risky. So do consider that. This is just for me. I just happen to be sharing it with you guys. Options are very risky. Can't stress that enough. And I also should note any of the levels that I talk about, any directions or, whatever I talk about in this video, plans change every single day, every single minute of every single day that the market is open. Things change. We get new information and stocks that were projected to go higher could be going lower and vice versa. So do consider that. And also, all of the data that I put in these spreadsheets, I do myself. I do manually. And so there could be some typos. So it's quite possible there are some mistakes in it, but generally, it should be good information, which I do get from Unusual Whales. Closing prices, I usually take those from Yahoo Finance. But I am going to be using Unusual Whales data in this. And so if you're not a monthly or annual subscriber of Unusual Whales, I now have the annual subscription to have access to their data. And, if you're interested in Unusual Whales, it's unusualwhales.com. I don't get anything for it. It's just me, sharing what I'm doing. But what I can say is that in my experience, I was initially very overwhelmed by all of the information on Unusual Whales. And I actually found myself to be doing a lot more learning when I took a step back and used the free services that they have on their website. Once I got a little more used to those, then I decided to do the annual subscription. And prior to, doing the free stuff, I had done, I think, 2 or 3 months of their monthly subscription, and I just wasn't really able to utilize it or at least develop a strategy that works for me. Trading is individual to the person, so I think it's really important to kind of develop what works for you. It's going to be different than what works for me, and so a lot of the stuff that I was trying to go with initially just didn't work. And so going over the data, the limited data, compiling it into these spreadsheets really helped me out, just getting hands-on experience, with that data, putting it in these spreadsheets and understanding where it comes from. And so a lot of actually the focus that I will spend less of it in these spreadsheets, probably more on Unusual Whales and in the chart, just because I am getting, more and more familiar with Unusual Whales. Also, do want to point out that there will be timestamps, so you can skip to your favorite ticker, but, since I am starting from the top here with AMC, ending with, which is behind Ed, the VIX, which is a pretty exciting week for the VIX. I have to say I did make some money on the UVIX, so that was nice. So I'm just going to be going over all of these tickers, and you could skip to them, but I would encourage listening to the whole thing because it's just really going over my thought process. And especially the ones towards the end, I might skip over a lot of things just because I got to be at work tomorrow and I'm tired. So hopefully I can keep this to under 2 hours, but it might take a little bit longer. Oh, and then something new that I added here is Grok's 10 premium picks. So I did this last week, and I'm just going to ask Grok about, some stocks, some options from Friday, from the 20th. And so I think that should be pretty informative. And yeah, that will be at the end. And I will include, I guess, not timestamps to the tickers, but I will include the tickers in the description of this video. So you'll be able to find them there. And from this list here, we got this little key here. Not all of these I'm trading, but as you can see, a lot of them I am holding from this key over here, the hands emoji. Some of them I am no longer holding. I will be saying goodbye to them. I'm done tracking them. And so made money as the $ bag. Lost money is the crying cat. Thus far, I have not lost a notable amount of money. I think, net, I have not lost any money on any of my trades or on any of the contracts. But I'm sure that will change as, I had mentioned that some, if not most, will be bad, and most, if not all, will go to zero. And also, ones that I'm just watching, not holding. Some I would like to hold, but, I just got to deal with the amount of, capital that I have, and I can't spread myself too thin. And then also, I try to add at least one ticker every week that I start tracking. And so that is marked by the crayon here, and that is going to be QuantumScape. I believe I released a clip from the live stream on Sunday where I went over that. So hopefully that was of interest. And then, yeah, just my thesis here, my general thesis for trading options. It used to be just taking profits at 20% profit. So that seemed to be pretty good, but then there'd be a lot of runners that I'd let go. And so what I plan on doing with these contracts, just getting, one at a time, because I don't have an excessive amount of money to be throwing into these, and I am learning, so I don't want to be going too heavy to begin with. And so I do contracts one at a time. The first one, I plan to sell it at 80% profit. If I get a second one, then I would trim at 80, trim at 20, close at 80. And then if I get 3, trim at 20, 80, sell at 100. And then 4, kind of going back, just trying to lower that risk, trimming at 10, 5 at 0. And then if I get more than 5 contracts, then I would trim in increments of 100% gains following the 100% gains. So, this is a 2x, 3x, 4x, up to a 10 bagger or a 10x. And my goal is that every week I close the week with no more than 20 positions, whether that's options or shares that I hold. And also, before I get into the tickers, I should note, in case you guys are concerned, some of these that I've covered for a while, I'm saying goodbye to. If you want me to continue following them and going over the data, let me know in the comments. If you don't mind that they're leaving, then I'm going to let them go. And there's a reason why some of these I want to be letting go, and that's just because there's not as much data on them, so I will be going over that. But yeah, I think I'm ready to get into the tickers. So let's look at the first one, which is going to be AMC, and this is looking at the $8 call that expires in June on the 20th, this coming year, 2025. And so I've been tracking this for a little while. This is actually, really like the contract that kind of started this series. And so what we can see here is this red line. That's my position. I haven't been too aggressive with it. I do plan on adding if it dips to, 45 cents per contract, which translates to $45 per contract, but it hasn't done that yet. And also, I am a little bit concerned that this could be pulling back more. The stock price could be coming down below $4 a share. And, I do have a ton of shares of AMC, so I don't need to overexpose myself to, the risk. But what I think is kind of cool about this chart up here is my position. It does look like that's kind of like a support level. And that actually kind of makes sense if, these contracts or the shares that are in green, the underlying stock price, looks like it's kind of forming maybe a little bit of a double bottom there. So maybe it could be finding some support and going higher. Looking over here, we can see the volume in blue got a pretty nice spike in the middle of November, and that corresponded to only about $60,000, so not a huge amount. That's the blue total premium over here. And actually following that spike in the volume, we saw a dip in the open interest in green there, suggesting that there was a net selling on that day of this contract. But overall, we have seen kind of this upward gradual trend, increasing trend in these contracts in the open interest. And yeah, I forgot to add it, but I will be adding, all of the videos that relate to these stocks just above me here. And probably next week, I'll start making these spreadsheets publicly available, not to edit, but you can download them if you want, just so you can kind of get more out of these, just, learning with me as I go. And yeah, I will try to include links to all the videos. I forgot to include yesterday's AMC video here. Sorry about that. And I just got the titles of them there. So it's just a little bit cleaner than it was before. And so, yeah, looking at this, what I might do, I might also look at the other AMC contract that I'm looking at, and then we can look at all the contracts and the chart and stuff. And so here, this other contract is the $20 call. This one expires January 16th of 2026, so more than a year from now. This is a leap. And what we can see here, this is the underlying stock price. It looks flat just because I have the axis up here set to 20. That's where the stock price needs to go to. But I might actually change that just so, we get more information out of it. And so, yeah, I don't know if that's better, but we can see, it's a little bit more dynamic. Maybe I want to adjust this one. And yeah, I need to adjust that. So that's still going to be 0. Anyways, yeah, so with this, basically I was holding one contract at 35 cents, which it looks like I bought just above Ed's head there. I bought on November 4th. I could have added more contracts at or below 35 cents, but I didn't. And so I ended up taking profits at, let's see, what percentage was that? That was an 80% profit on that contract, so pretty nice there. And then when there was this big move up, maybe I FOMO'd a little bit. Oh, and I forgot to mention that from the theses, that is, this means here, to not fall in love, to not FOMO, to not get jealous, to not chase, and to not be greedy. And so with this one, maybe I broke that rule a little bit because the premium price did come down to, oops, I don't want to drag that, to below 35 cents. So I could have reestablished that position at the same average that I had, but instead I got a couple contracts, one at 55 cents, another at 40 cents, which puts my average at 48 cents, 2 contracts here. And for that, I plan on getting another one if it does dip to 35 cents, but I don't have an order placed. When it's yellow, that means I'm just looking at it, but I don't have an order placed. And really, that's just because I have a ton of shares. I don't want to overexpose myself to AMC, to risk. Yeah, because these contracts may go to 0. For this other one, I should note, because this was asked last week, I still have the same 3 contracts. I could have, taken profits last week because, there were highs over the past week that were higher than my average of 53 cents. But, I'm waiting for 100%, 200%, and 300% swing. Maybe I would, end up closing this position at 100%. Just don't want to be exposing myself to the risk for so long. But yeah, if it does dip to 45 cents, I'd add another contract. But really, I'm not really going to be too aggressive with these AMC contracts just because a lot of the data that I'm seeing is making me feel really bullish regarding some theses like NEO and some other ones, but not necessarily AMC, or at least not just yet. So I'm not really, trying to overexpose myself with this one. But so we can look at the other AMC data, but maybe I should first look at the chart. And so I did just put out a video on this, basically talking about how, we swept the lows over here. I do think it looks pretty good, like we could be holding some support here. before going higher, but I also think that there is the possibility of this breaking into the threes, not just for a wick down on a couple days, but actually like getting down to around $3.50 a share. So if that does happen, then I would get more heavy into the options contracts. But for now, I'm happy to just, add a little bit to my share position each week. Not too aggressive with that, but also just, leave the opportunity open for adding to contracts that I hold, which is, again, this $20 call that expires in January of 2026, and then also this $8 call that expires in June. But let's now look over at the unusual whales data so we can kind of get an idea of what's happened over the past week. And so with these charts, what I like to do is just look at the past 30 days to kind of get an idea of what's going on. And then this one here, I'll probably change that to the 30-day as well. But what we can see from this is that over the course of the day, Friday the 20th, we saw the stock price in yellow going up. And with that, net call premium has gone up, suggesting that, there's more buying of calls, more people going long as the stock price goes up, and the net put premium has been going down. So it suggests people are selling puts. And so buying calls, bullish, selling puts, bullish. So that looks good, but it's also, 100,000 here. So it's not, a huge amount of premium. It catch my attention more if it was like a million or in the millions. But anyways, looking at this data here, this is the $8 contract that expires in June that I went over the data with. So we got this big spike here. I believe I had mentioned that was the middle of November. We got a spike in premium on that day of about $63,000. And so, that's the most notable candle for this contract. It's not really that impressive. And I have to say, I don't really go for the most exciting contracts just because I try to find ones that are a little bit cheaper and a little further dated out. Just, to lower that risk as I am learning as I do this. And so this one's not necessarily that exciting. Also, the $20 call that expires in January of 2026. Got some spikes here, but these are, the premium on these, about 68,000. So, this seems a little bit more dynamic than the June $8 call. And we can see the total premium down here and stuff. And actually, what I might do, I might switch back over to the $8 one and just look at the day chart here. Really just not that much there. The $20 one, see a little bit more active, given that this is a leap. And there's just going to be more activity with it. So that makes sense. I think I might actually switch back to the 30 and then look at this other contract. Stood out to me. I guess this is, 30 days. So not on Friday, but on Thursday, there was this kind of big spike, candle premium of $348,000. And you can see that in the data here. This is not a contract that I am covering in my spreadsheet, but that doesn't mean that this data is not useful for, assessing what's going on with the stock. And so what we can see from this data, this is more than $250,000. So while it'd be nice to see millions of dollars traded on this, $250,000, that's a good amount of money. It's not just a few degens YOLOing on this. This is, bigger money. And so from this, we can see that total premium, $348,365 traded on that day with a volume of 1,979. So 1,979 volume contracts traded on that day. And the open interest on that day was 509 contracts. But leading into Friday, we saw an increase in that open interest of over 1,900 contracts, with that open interest going up to 2,400. So that looks really good. This is bullish. Just like I was talking about with this premium up here, net call premium going up as price goes up while the put premium goes down. So that, is in line with, the I guess, the calls are following the direction of the stock price. But anyways, didn't get much volume on Friday, kind of the holiday season, so it's not really too surprising to see a little bit lighter volume. We actually might see lighter volume into next week, and that might mean that stocks they might be a little bit more buoyant. They might rise up, so that could be pretty good for us. But yeah, so I just wanted to go over that. This does look bullish to me. It could look more bullish, but if we just look at the total premium here, that stands out like a sore thumb, so that looks good. And then just switching over to the 1 day again, this looks like it was just one order. So this was, I want to switch over to the 2 day because that was on Thursday. Yep, so that was just one order or one contract on Friday, so that was nothing. But what we see here is this spike. This was a bid of 1,967 contracts for, I guess, on the ask side. And so, yeah, this seems like it was, kind of a planned executed order rather than something spread out. So this, stands out. So I think that's good. Switching back over to the 30-day, I'm just going to type in AMC up here to see if there's anything that stands out from Friday. And so here from searching that from this, contract lookup, I'm just going to go over to premium. So it sorts by premium because the default is sorting by highest volume. If you're looking at volume, that might be useful, but you can kind of think of it as, or at least I think of it as, volume is going to be sheep. Whereas premium, that's the big money, that's the wolves. And, we want to be the wolves. And so here what we can see is the premium, 200,000 is the highest amount of premium traded on Friday. Does look like that was a put. So, maybe that's something that I want to follow up on. But if I do look at that data, I imagine it was probably selling, although I won't get that data until just before market open on Monday, as we do see, the increase in open interest here. It's not that massive, but we did see a big spike in volume on Friday. And considering the data here in that call contract that I just went over, which was the $5 call that expires January 15th of 2027, I should have mentioned that is a leap 2 years out. That's definitely more bullish, whereas this is a put that is expiring this coming Friday on the 27th. This is almost 5,000 contracts traded on Friday. I would imagine it was net selling based on this data, but I could be wrong about that. And so, yeah, before I switch over to the next ticker, I just wanted to point out, this contract that I was going over was the $5 call for AMC that expires January 15th of 2027. So it's more than 2 years from now. So this is a leap into the future. So this is nothing short dated here, has lots of volume or lots of premium on it. So nothing here really has my attention for the short term, but that doesn't mean I don't think that AMC could be rallying. And if it does, I'll probably be trimming based on my strategy, which would next be 100% trim for the June contract over here, then 200, 300. And then for, BlackBerry, not BlackBerry, but for AMC, this would be just that 20% and 100% for this one. But yeah, we're still trading, in the low 40s at best, and my position's in the high 40s. So we'll have to wait and see with that one. But yeah, the next one, I got 2 contracts here for BlackBerry. This is one that I'm really proud of. I did put out a video on it. You can see here, BlackBerry stock about to go boom, boom, and it did just go boom, boom. So I feel pretty good about that. And so I no longer am holding any BlackBerry contracts, was never holding any shares. And so these 2 contracts that I'll be going over, which I will not be following up on, but if you want me to continue following, if you want me to continue tracking them, let me know in the comments. And so this is the $3 call that expires in June, plenty of time. But considering that the price is above $3, the target's hit, and I was able to exit, at my levels, even though I could have made, of course, more money. But that's how it goes. When you take profits, you could always make more money. And that's always going to be the case, because if you if you get the top price exactly, it may not get filled, and then you're left holding the bag. And so, I was able to take profits with this 20%, 80%. And the other contract, which, is also a leap, this one is a $3 contract again. And by also, I mean relative to the AMC one, this is also expiring January 16th of 2026. And, I could definitely hold this, make some more money, but I was able to trim out of my position based on my plan at 20, 80, 100%. And from this, just this one contract, I made over $100. From the other one, I made over 30. So, it's not really that exciting, but it's about the percentages, not about the dollars, and it's about me getting more comfortable with this stuff. And so what we can see is that the premium and the stock price has been going up. And, I really just made that video because that's what the data seemed to be suggesting. And so for this, the data over here, we can see volume spikes with that open interest goes up. And, total premium spikes here. This is 40,000. This is about 90,000. And, we also still have IV that's pretty low, still like below 70. Excuse me. But for me, it's just the data that's here. Maximum is, 90,000 for this contract. For this other contract, again, about $90,000. Excuse me. And that's just not enough money behind this for me to really feel confident. And I think that's just kind of an example of me getting more familiar with options, looking for the data. And, when I see whale activity, I want to follow that or track that. Whereas this, it was like the chart was telling me that it was looking really good. The data was in support of it, but $90,000 is really not that much. So I'm not going to continue tracking it unless you guys want me to, so let me know. But yeah, just if we flip over to the chart, we can see that BlackBerry has been on this nice rampage, started covering it around here, suggesting that this was a bull flag, and it has gone up higher. And, my target was really around $3 a share. I also did mention this Fibonacci. Let's see, that's a Fibonacci extension. So doing this retracement, that was right around $3.40. Closed at $3.69. I feel like that's a good omen, with the 69 cents there, but maybe not. And then if we do look at this, maybe there's another level here that might suggest that the top could be in around where it's at. So let's just see where the 786 is. I mean, we kind of went past that. And just looking at the candle for the day, up almost 24%. This was following their earnings. We can see that it hit a high of $3.70, closed just 1 penny below that, and in the after hours is back at that high. So I think that this could continue running for sure, but I think it could also, pull back. And maybe find 340 as support before continuing higher, just like these kind of like stair-step bull flags on the way up. Could be doing that again, but it could also be doing a more notable retrace as this was, a pretty big move. So for me, I'm done tracking it. I don't want to, FOMO back in or something. I took profits with it. I feel good about it. And it's also, I think kind of a funny one because, BlackBerry, we think about those old phones, but they also, have done a lot with cybersecurity software. I believe maybe a little bit of AI, but maybe I'm wrong about that. And so, I think it was a good play, and I'm happy about it. But we can look at some of the data from Unusual Whales. Looks like I got 3 contracts here. So I'll go over the first one, which is the $3 call that expires in June. We can see, big orders going up here as that premium's going up. I took profits on this one a little early. I held the December one, the January one, the leap, a little bit longer. So I could have, made more money with this, but, I'm proud of myself. I stuck to my plan. And I think that's the most important thing. And, so what we can see, the total premium here, it's not, super ton of money. We can see, though, that as the stock price has been going up, the call premium has been going up on that day. And the put premium, it's, been more or less flat. And one thing I forgot to do with AMC, which I might actually want to do, Sorry to switch back, but I wanted to look at this on the 30-day to see, yeah, the increases in the call premium that we've seen. It's actually been not that notable relative to the spikes we've seen over here, which has been in the $1 million range. So, it would be nice to see that pick up some with AMC. So maybe we're starting to see that. As far as with BlackBerry, we got these pretty nice spikes, but this is only up to around $400,000. So this could, I think, continue to move higher, but it might also be getting ready for a pullback, kind of like what we saw over here. Maybe that would just be kind of temporary. So I think it's good to, like I did, take profits and move on, not get hung up on it. And here, got the 30-day data for this. This is the contract that expires in December. So this actually expired yesterday on the 20th. This is a $3 call. So you got all of this, the volume traded on the expiration date. And, hopefully people were making money with that. But it does look like, it closed in the money. So I think, a lot of people made money on this. So good for them. But since this is dated in the past, I am actually going to say goodbye to this. I think, total premium traded on Friday was less than $1 million, but that's just because, it's the expiration day, so it makes sense. And it looks like, pretty much more volume than the open interest was traded on Friday, and that's just because of expiration. People either taking profits or, exercising their calls. So, yeah, this could be... I think that BlackBerry could be going higher, so maybe I do want to continue tracking it. I'm not sure. So, but yeah, this is old news. So I'm gonna say goodbye to it. So let's say goodbye to this contract together. Goodbye, $3 call that expires December 20th, or that expired December 20th. The other contract here is the January 16th expiration of 2026. We can see that premium has been picking up a little bit, or the volume, I should say, but not as much as it was back here. That's when we had a candle premium, about $69,000, almost $70,000 back in the middle of November 13th. And so if you look at the premium down here, nothing really stands out, not $1 million orders. Maybe that's something that we start to see. And maybe, sure, I could make more money if this continues to run, but that's the name of the game. You got to take profits. Just looking up more contracts here, sorting by premium. Yep, the highest one is that one that I just went over, about $1 million, a little shy of it. Other than that, I'm not going to be following the other contracts, so I will switch over to the next ticker, which is going to be Celsius. But I will do that from over here. So yeah, the next one, this is one that I have started to accumulate a small position with. I did put out a clip of this, the Celsius kind of bullish thesis. And so this is the $50 call that expires in June of 2025. And so last week, starting on Wednesday, it looks like, I bought the high, so that's kind of unfortunate for that day, but my plan was based on the low from Tuesday was to pick up a contract at that low. And so while it might seem like I bought the high that day, I actually bought the low from the previous day. It would have been nice if I kept my cool. I could have gotten some contracts a little bit cheaper, and I've just been getting my average down. So now I have 3 contracts. And my average now is $1.52. And I do plan on trimming at these percentages listed up here. And so what we can see with this one is, the stock price has just kind of been going up and down here. And looking at the volume over here, we got these nice big spikes. This corresponds with, again, it's not a huge amount of money, $60,000, but there is a contract that I'll go over that does have a lot of money behind it. So I find that to be, really interesting. But with these spikes in the volume, we see that open interest steadily increasing. So that's looking good. And, it's just the premium. I'd like to see that be a little bit higher. And I should note, too, that while this is yellow over here, since it is, I believe that's cyan, I don't have an order placed to buy. But once I add some more funds to my account Monday morning, I do plan on picking up another contract at 120. If it does dip to that level, which might be a little bit reckless, but we haven't yet seen 120, so that would be, a nice dip buy, getting my average down. And, I want to go over what makes me bullish on this, which is actually not really in the chart, but I should go over that first. And, because this is kind of based on, it looks like we've been seeing like falling wedge over here, got a little bit of a breakout, but then came lower. And, I guess, yeah, from the chart, what gives me a little bit more confidence in it is from this move up, we did get a pullback to the 786 right around 2676. We have gone below it. We have not closed below it. And so I feel like this could be the beginning of a bottom formation. That's at least what I'm hoping. But, hope is a 4-letter word. So this may continue to go lower. So maybe it's kind of foolish for me to add so aggressively, already having 3 contracts when it's over $100 per contract. But, that's just what I ended up doing. So I think really also just because I put out that video, I kind of want to play into that and, lean into, well, if I felt compelled enough to make that video, I should be taking advantage of these dips. And so that's what I'm trying to do. And that's part of, why I like making these videos. It forces me to hold myself accountable. And yeah, so the contract that I was looking over was the $50 call that expires June 2025. And so over the past 30 days, we have seen, some spikes in it, but the premium has been, at most, around $50,000. Some things that don't look so great, I guess, with this is going to be, this is just from the day though, so I'll switch over to 30-day in a second. But we see as the stock price has been coming down, the call premium has been going down. So that makes me think that these are being sold, so it's not looking as good. Whereas the put premium, it's more or less flat. So yeah, but we do see the volume of the calls being green as far as, if I understand that correctly, majority volume in calls. But that just seems like people are selling into this downtrend, so it's not really that good. Looking at this on the 30-day time scale, I have a pretty big spike in puts. Looks like that was on the 20th, I believe. And so, yeah, maybe not looking so good with this data. So, maybe this is going to be one that I end up losing some money on. But, I have until June, so I think that's a good amount of time. And so I'm just going to go through some other contracts that stood out to me as having, a lot of premium traded on them. And I'm just going to go based on, when they expire, because that's how they're ordered up here. One is the $30 call that expires on the 17th of January in 2025. And the reason why I put this up here, it has over $1 million total premium traded on the 12th. And following that, it looks like the open interest went down. However, following that, we have seen it go up. So here it was about 10,000 contracts open, then came down to about 9,500. Then it has gone back up to 11,500. And this is a call. So, while this was a little bit bearish here, this trend accumulating more, being in the hundreds of thousands, I think that's pretty good. And this is, shorter dated. But the price is, below $30 a share. So this is, kind of good. And yeah, what I should mention too, I didn't mention this about the chart. Why did I pick $50? That's just because I've got these lines drawn here, basically going back in time. There was some resistance there, some support here in the past around 50. I think that could be resistance in the future. And then over here, there was some resistance. Maybe it would be a resistance again, and that's around 40. But yeah, the contract that I am following is the $50 strike. But anyways, coming back to this, the next contract on this list it's kind of an odd one. The 46 and 67 cent put, kind of weird, that expires in January of 2025. And this one, over the past 30 days, does look like there was a pretty big spike on Thursday, and that was, over 1 million, almost $1.7 million traded on that. But if we look at the change in the open interest from that day into the next one, it was, flat. So these puts were just swung, day traded. Hopefully the person made some money, but yeah, I mean, so that kind of stood out to me. I find that to be interesting, but I wouldn't say that's really bearish or bullish. They just took a day trade on it, so good for them. And that is why we see this big spike here, or over $1 million. Let's see another put. This is, again, kind of an odd price, $48.33. This expires in January. And on Thursday, again, saw over $2 million in premium traded on that day. And what we see in the changes in the open interest, these were just day trades, so that's not bearish or bullish. Longer term, just in those days, they bought some puts, hopefully made some money if it dipped a little bit for them, so good for them. But yeah, then let's see, the next contract here is the $130 put, also expiring in January. It's kind of a nice number there, no odd amount of change. And this one, we got some nice spikes over the past month. This spike looks like it was over $7 million, whereas just a couple days ago, we see over $3 million. Again, a put. So let's see, does this look more bearish or bullish? And actually this, I think this is a really good lesson because we see, millions of dollars traded on these days, and we don't see much change in the open interest. And so going back, let's see that $7 million day. Let's see over here, we got 750 contracts traded on that day, but the open interest didn't trade. So that was just day trading. And so a lot of this has been day trading, although here it does look like, about $1.7 million traded on the 5th of December. And following that, the open interest went down by 100. So that's actually more bullish because the number of puts were going down. And so that, is bullish. Selling puts is bullish. This next one is the one that I've gone over. This is the one that I personally am tracking, the $50 call that expires in June. Then we also have this $40 call. This one expires in July of 2025. So a little bit more time. Do see this pretty big spike. And this is the one that stood out to me because it's over $18 million. And so that was traded on December 12th. And following that, it does look like, it's kind of odd because you see that was the spike in premium. That was the top. And then we see this pullback. And it's like, really? You put 18 million into this up here when you could have bought a lot cheaper down here. But let's see, what does that data reflect? $18 million in premium traded on the 12th, which represented about 38,000 contracts. And following that, we saw, so that was the volume, which the open interest at the start of that day was 172 contracts. But then, effectively all of these contracts, all of that volume from that day went in to, other than like about 122, is it? Went into the open interest the following day. So going from less than 200 contracts open to now more than 38,000 open. So that's, a lot of money behind it. And even with, a little red day, 4 contracts were sold, 1 contract sold between Thursday and Friday. No big deal. We still got over 38,000 contracts on this. This contract does expire in July. And it is the $40 strike, not the $50 strike that I'm in. So this is, in that sense, a lot less risky, but the premium traded on it is more. So like on Friday, the low is 293. For my contract, the low is 130. So this one, for me, at least personally, is a little bit more manageable. And tracking this other contract gives me more confidence in my analysis, my play, my thesis. So I feel good about that. So yeah, I'm just stoked about this one. But I may, I don't know. We'll see. I feel good about it though. The other contract gives me some more confidence. And so I'm going to get back to here. And so we can actually, I'm just going to, let's see, just go there. And so the next one on here, this is the ChargePoint call. This is a $2.50 strike that expires in May. And so this is one that I still hold. And you might notice that I plan on selling all of my position at basically a 10% profit. My position is 11 cent average. And I basically just kind of want to get out of this contract. And that's not because I'm bearish on ChargePoint. I have a bunch of ChargePoint shares. And, I just don't really feel like there's enough data here to make me be so confident in it that I would put money on contracts that expire because, it might be expiring. More likely, will be expiring worthless. And so the reason for that is, we did get, some, good moves around earnings and also just recently with, I think, a partnership with GM. So things are looking good for them. We do see these spikes in volume that correspond with increases in the open interest. So I think that's good. But if we look at this biggest spike in volume, that corresponds with only $9,000. So that's not even a degen YOLOing. That's like, 9/10 of a YOLO as far as Wall Street Bets defines it. And so I just think that my energy would be better focused on contracts that have more data, i.e. more money behind them. And so I just don't think that this is necessarily going to be a good trade. And if I were to be focusing on ChargePoint, whether that's calls or puts or shares, I would rather be focusing on just, slowly DCAing to my share position to just build that up. But also, I'm not too aggressive with that stuff. So that's kind of, where my focus is going to be moving forward with ChargePoint. So I think I will be saying goodbye to this contract next week unless I'm still holding it. But since it does look like it was getting up to a high on Friday of 11 cents, and we will be seeing some light volume next week because of the holiday. That's half day on Tuesday and closed on Wednesday for Christmas. And so, I think that this will be getting filled, and so I'm going to stop tracking it. If it dips to 7 cents, I take advantage of the opportunity to get my average down since my last buy was at 8 cents. But, I just, rather focus the energy elsewhere. And it does look like, let's see, I have 5 contracts. It's $55. It's not nothing. So, I'll move that elsewhere. And so, I don't really have too much to go over with ChargePoint, but I will go over the chart real briefly and get into the little bit of data that's there. This is like, would be an ideal situation, but it looks like this arrow just kind of got shrunk. And, putting in higher lows. So I think that looks good. Bullish engulfing candle reclaiming after, this pullback. So I think that's good. But, I just think that there's so many layers above this, so many levels of resistance. And there's not enough money behind it because it's, penny stock. It's right around $1 a share. So I just, rather be focusing on other contracts. But I hope that this will be going up, rallying, above 250, really. I think my average is right around 250. I'm not sure exactly. But it'd be nice to hold this and, fill these gaps up here around $5, $7, whatever. It's going to take some time, though. And so, I don't want time to be working against me like it would be with a contract. I'm cool to just add here. And so if we do, I want to get over to here. It looks like the contract that I am holding, got the data here. Over the past, this is the 30 days here, it looks like. There were some calls bought here. Following that, the stock price went up, so that looked good. Now we got a little bit of spike in puts. But if we just look at this on the daily, we can see that the stock price, went up on Friday. Call premium's gone up more or less, but there was this dip here. Guess people taking some profits up there as the put premium has gone down. And it does, if you couldn't see that, put premium has come down. We do see a lot of this call volume there, though. Just looking at this data over the past 30 days, nothing really stands out too much. This big spike in the data here, the volume, that represents premium of, like I said, about $9,000. So it's nothing that stands out too much. And total premium on these days, $1,000, it's just not enough to really get my attention. But one that I did kind of want to look at is this $1 put for May. Just kind of curious about this. I think because it had, $280,000 premium traded on Thursday, and so I was curious to see if that open interest went up or down, because this is a put, so I would think it's bearish. But if the open interest went down, then it's bullish. And so what we can see is this $280,000 traded on Thursday, the 19th, had a volume of over 11,000 contracts, and the open interest on that day was nearly 12,000 contracts. But then it looks like it decreased by about 3,100, nearly 3,200 contracts, coming down to 8,685 contracts still open. Maybe it's changed a little bit. Only 6 contracts traded on Friday, so it would have only changed by at most 6. But yeah, so this makes me feel a little bit more confident in the bull thesis. Good for me and my shares. But as far as the options, it's just not worth the risk. The amount of reward is not high enough for me to want to risk this, considering the limited amount of data. But I guess, I will. I don't know if I searched for Celsius ones, but I'll search for ChargePoint just to see, what the maximum premium was traded on Friday. 39,000. Again, it's not a lot of money, so it doesn't really get my attention. So yeah, I'm not too interested to be following that, other than just getting information about it. But it's not even really hundreds of thousands, or at least it rarely is. But yeah, coming back over to here, I've got this GameStop call. This is the $80 call that expires June 20th. And this is one that I picked up 2 contracts with. I don't typically go for contracts that are this expensive. My average is $3.25. But, it has effectively, I got this dip buy at 300. The lowest it's been since I established my position back here at 350. The lowest this contract's been has been like 295. I would consider getting another contract at 250. But I don't know that that's going to happen, because I think things are looking really bullish for GameStop. It's just every week, it just keeps looking better and better and better. And, just for this contract specifically, there wasn't anything traded the past couple days, so I just don't have much data there. But, earlier in the week, Monday through Wednesday, the lowest was 308, but the lowest the last time it was traded was above my average. So I feel pretty good about this. And this one, rather than taking profits at 20% and 80%, I'm breaking a little bit of a rule just because I feel like GameStop could really take off. I'd be taking profits at 100% and then 200%. So this is, 2x, 3x. I'd be happy with that. And, it could quite possibly run, but then I'd be making, let's see, about, this I'd be getting all of my money back, and this I'd be making a net profit of nearly $1,000. So I'd be very, very happy with that. But what we can see with the data here, big spikes in volume that correspond with 140,000, this one about 100,000. So, it's not millions, but this is also not like the sexiest contract. And with these spikes, we see open interest went up here, and that actually came down. So this seems like it was just kind of a swing trade. But generally we see that open interest trending up. So that's good. Implied volatility is pretty high. So maybe, that's a little bit risky for establishing a position and stuff. But yeah, I'm in the green with it. So I'm just going to hold on to it and see if these get filled. And if they don't, then I'll reassess. But I do that kind of on a weekly basis as far as, updating you guys with these videos. But yeah, let's look over at the chart. And so from this, we've just been like hugging this uptrend. And so I'm just hoping that we break higher. And one thing that I heard, and I might actually just remove my drawings for a second, switch this over to the weekly, is that we got the highest weekly close at 29.82. The last time we saw a close higher than this, dang, that would have been on a red day, believe it or not. But on August 26th of 2022 is the last time we got a weekly close above, where we're at, where we closed last Friday. So I think that's looking really good. And so, I'm really excited to be holding some GameStop calls. I hope that there's not going to be any dilution or any, capital raise until I believe, January at the earliest. So, I feel pretty good about my calls with this. So, yeah. And then if we look over at the data, the contract that I am holding, let's see, that is, I'm just forgetting, $80 call expiring in June. Let's get this right, $80 call. I've got a bunch of GameStop contracts over here just because there have been a lot of like $1 million orders as far as I can tell. So this is the $80 call that I am holding. And with this, we can see, this spike over here, $145,000. So nothing too crazy there in the premium relative to, millions of dollars. But there are other contracts that we can look at. And so this data over here, this is just the 1 day. What we see is the yellow is the price of the stock. That's going up. Premium for calls, net call premiums going up. Net put premiums also going up a little bit, but not as much as call premium. If we do look at this on the 30-day, we can see that, let's see, just trying to figure out how do I interpret this? We've seen some selling. Sorry, I keep moving this around. We've seen some selling of calls, but generally the past couple of days looks like they've been going up along with the stock price. So I think this is looking good. And also, this was like on Wednesday. Panic, around the FOMC. Kind of makes sense. But yeah, let's look at some of the other contracts because I think that they'll actually give us, some more information. It's probably a little bit more useful. So this first one, this already expired. This is the $30 call for yesterday, the 20th. This one expired worthless, unfortunately, just by 8 cents. And so there would have been a lot of volume, a lot of premium traded leading up to expiration, which you never want to be holding contracts up to expiration. So this is very risky. But yeah, we can just see here the total premium, millions of dollars traded the past, more than a week. So that's kind of got my attention, but this one went to zero. So let's just look at this on the day. There's a little bit of a spike because it was above $30 a share for a minute. But then it closed below. And what did it close at? It closed at zero. So this is risky. And with that being said, I am going to remove that one from this list. And then this is another one that's going to be risky. This is the $30 call that expires this coming Friday the 27th, short holiday week, so not as many days, really only 3 full trading days before expiration because we got a half day on Tuesday and Wednesday the market's closed. But what we can see here, I like looking at this on the 30-day, we see, volume starting to pick up. And if I scroll down, we see, on Friday, almost $3 million traded. We don't know if that is buying or selling based on this data because we don't have the change in the open interest just yet. We'll get that before market opens on Monday. And let's see over here, we've got another, $1.5 million total premium traded. And that, unfortunately, we did see, of these 6,000 contracts traded that day, we actually saw a decrease of 161 contracts between that day, the 17th, and what I guess was Wednesday. So maybe that makes sense, de-risking before the FOMC. So I think it was actually good that they probably closed those out because it pulled back a little bit following the FOMC. And so, yeah, we'll have to see what this is saying starting Monday. And then other contracts, this is a $20 call. This one expires in January, so a little bit more wiggle room. Also, it's in the money, so that's good. It looks like premium traded on this on Friday, over $1 million. On Tuesday, over $1 million again. That was net selling. It's in the green, so I guess that's not too surprising. But, that's kind of, bearish selling so many calls, millions of dollars worth of calls. Although, this is total premium, which is represented by about 900 contracts. Yeah, and actually, yeah, I mean, it went down by about 600. So that's a good amount of money, hundreds of thousands of dollars from getting pulled out from this contract. But that's people taking profits, I imagine, because it's up, and this is a strike of 20. Another contract is a $25 call, also expiring in January. Millions of dollars traded the past couple of days. Does look like the open interest has been generally going down, but that could just be people taking profits because they're in the money. So, that's fine. I'm just going to go through these a little bit quicker because I got a number of them. I've also got the $30 call expiring in January. I'd expect less profit taking with this because it's about to be in the money. And so I think that these could be worth more. Millions of dollars traded, going back, more than the past week, or this was Monday. So going over the past week, millions of dollars traded. Net, it looks like open interest went down by about 2,000 contracts over the past week. So that isn't so great, but, it could be a lot more selling. Because on these, some of these $1 million days, the number of contracts have gone up. And so if, this $1 million day contracts went up, that volume of 4,000, this open interest could end up being, more than 34. So over the course of that week, that premium could have gone up. So that's good. The next one on here is the $125 very out of the money call that expires in January. This one seems like gambling to me, but I think this was also the one that was getting a good amount of attention. Nearly $5 million traded on the 16th, nearly $4 million traded on the 17th, and nearly $17 million traded on the 11th. Over 17 million. I mean to say 1.7. Sorry if I'm saying that incorrectly. This is 1.1 million. December 5th, and we see this open interest is about 60,000 here. It's, almost double that now. So this is bullish, but, I don't know that this is going to go in the money. So, but yeah, 4.8 million traded on this day. Excuse me if I said 48 million. So that's looking good. We also have the $125 put, which is in the money. This is expiring also in January. And we've had some $1 million orders over the past week, but I don't feel like this really stands out too much. Open interest went up to 140. Yeah, I don't know. I mean, it's $1 million, but it's not a lot of action. This is, going from 0 to 100. And then on this day where there's another million traded, that was effectively day trading because it only went down by 1. I don't think there's too much to tell with that. The $28 call, this one expires in February 21st of 2025. Looks like on Friday there was over $1 million net premium on Friday. And so that one stands out to me. This looks like it's a newer contract. But yeah, $28 call expiring in February. Premiums around $500, or $5. High of over $6. That's a good amount of money. And then one day it looks like there's this one candle, over that's $1.1 million traded right there. So that's pretty notable. It went up, and they're still holding this. This is a call. So this might be one that's interesting to follow, so I'll probably be doing that. And then also the next one, $50 call. This one expires in June, so that's the expiration that I'm interested in, but I'm doing the $80 call. And this, let's see if I scroll down. I think this one maybe I previously covered. This one doesn't have millions of dollars traded on it, so this is not that notable. Premium for this, similar to the $28 call that expires in February. This one expires in June, though, and it's a $50 call, so the premium is about the same, $500 or $5 per contract, which means $500 per contract. So this might be a nice alternative if being bullish. Also got the $80 call. This is the one that I'm holding. This one, the data is really not that exciting, but I think that this will, be a good, I think it's a safe bet and it's affordable for me. So I like that. And then the final one that I'm going to go over is the $125 put. This one expires in January 16th of 2026, so a leap. And this one, it looks like there was a $1.8 million order on the 18th, and we got over $5 million on the 13th, over $1 million on the 12th and the 11th. So we see some spikes in these candles here. Yeah, let's see. From those, let's see this $5 million day, we saw the number of contracts increase by 260. So this is bearish, but it's $125 and it's a leap. So they're really just betting that if that price will be going lower than where it's, at when they buy it. And they've just got, a bunch of wiggle room between now and January of 2026. But yeah, $125 put, that's in the money. So I personally don't understand the appeal to this contract, but I'm just not as fluent with it, because I am learning. But anyways, I'm going to get back to the table over here. And I am going to go over to the next ticker, which is Hycroft Mining, ticker symbol HYMC. This is a $3 call expiring in May. This is one that I hold, and I've been getting my average down. And this is one that I plan on not cutting losses on, but taking a small profit around 10%, not doing the plan that I have with the other ones. Just because, with these spikes in the volume, it's great that we see open interest going up, but those spikes in volume correspond with, like less than $4,000. This one, a little bit over $4,000, like $4,100. So it's really not that much money. And so that just doesn't give me as much confidence. I don't have any shares of Hycroft, but also, I feel like this is kind of a companion play with AMC. And, you can't put all of your eggs in all of the baskets. And so I think that this is just a little too speculative for me. But yeah, if you want me to continue tracking it, I will. But let's just go over to the chart. Let's see. I still feel like this could be going higher. I just feel like it's a little, too risky and not worth it. But, my thesis was really that like we'd be coming up to this uptrend. That hasn't happened. I've been hoping that this uptrend would be acting as support. That hasn't happened. Maybe we form a double bottom here. I have months and months to get my average down. So that's kind of the way that I manage risk rather than having a stop loss with these or something. But yeah, this one could very well be a dud, but I suspect at some point, maybe when we test around $2, getting to like $1.95 again, maybe that will be a bottom and it starts to take off. And then I exit my position. It looks like my average is around 47 cents. I have been attempting to get it down, but doing that very slowly. How many contracts do I hold? It looks like quite a few. And, I just need to be getting out of this one, I think. So, I don't have an order placed, but I would buy another contract at 20 cents here, but we haven't seen that low yet. So I'm just kind of keeping an eye on that. I think it could go lower, and I would buy, but I would like actively buy and not just have a limit order placed and waiting for it. But then if we do go over to, let's see the data over here, looks like, yeah, I've just got the one contract here that, I went over. Look at the total premium on it, just so small, maximum like $4,000 a day. So yeah, I'm not too compelled by this. It does look like, puts have come down over here recently as calls have been, net positive as the prices come down. So, take that how you will. I don't think it's worth the amount of reward is not worth the amount of risk, considering the number of contracts that I have at this point. And so, yeah, I'd like to get out of it. And no contracts traded on Friday. That looks like a high of 30 cents. So, I'm hoping we get a bounce soon. It's just been fading. But, I have until May. So we'll see. Maybe this is going to end up being a loser. So it'll be interesting to document. But if I get out of my position next week, I'm going to probably stop covering this unless you want me to, so let me know if you do. And the next one is going to be Intel, ticker symbol INTC. This is the $30 call expiring in June. And so this is one that I do have a position in. It looks like I've got 3 contracts. As you can see here, bought at $1.80 and 70 cents. I would consider getting another contract at 60 cents. I do have it in cyan down here, but I just don't have that order placed yet because I need to put the money in, start on Monday. But yeah, I just place a limit order to buy that dip if it does dip, and if it doesn't, I just got some cash on the side, no big deal. And so with this, we can see that this has been coming down. Same with my position, small position a little bit. So this nice spike in volume corresponding with an increase in open interest. So that looks good. And that spike in volume corresponds with $2 million. So that is interesting. That gets my attention. I'm excited about that. And also the implied volatility is super low. So I feel like this could be a real winner. Yeah, but I do think that this one could definitely be closing or expiring at 0 out of the money. So I think it's risky, but, with the plan to take profits, I could be making, let's see, over $100 with this. So I would feel good about that. If we look at the chart of it real quick here, we can see that, we're basically ideally forming like a double or maybe triple bottom over here. This does look like the 786. Maybe I have to switch over to the weekly to get an idea about that. And that's really, just from this retracement, which I guess I didn't do a video on, but I, find that to be fairly compelling. The 786 there, which has been, tested. And, I think that this could be set up to run. But, I could be wrong. $30, that is going to be effectively just getting up beyond this gap, and so you might not see that gap there now on the weekly. If we look at it on the daily, got that nice gap there right around $28.87 or right around $30 a share. And so if I do switch over to the contracts, I do have a number of them here. Man, it's an excessive amount. Why do I have all of those here? Let's see. Let's just first look at the one that, I have. This is a $30 call expiring in June. And that's this one. And so we can see this big spike in volume, over, just, I guess, under $2 million, but just about $2 million. And, we see the price coming down over here. And call and put premium is, not too far off from the 0 line. But yeah, let's see. I don't know how. I'm just going to go through these contracts really quick just to kind of see premium, millions of dollars. I should start with the first one up here. This expired. I'm actually just going to remove the ones that expired because I don't have enough time to go through all of these. I'm sorry. But yeah. I want to cancel you, buddy. I'm not able to cancel that one. Just going to refresh it. Dang it. Let's get back to this one. Okay. And so I've got this first one. This is the $20 call. Expires in January. And we can see that there's some $1 million orders here, multi-million-dollar orders. And so following this, nearly $2 million order, volume of 14,000. The open interest went up by about 11,000, going up to 31,000. So looking good there. This $2.5 million day actually went, the volume traded, the open interest, I should say, went down by 4,700. But then that day there was about $1 million traded, and then it went up by over 5,000. So this is, it looks like the maximum was around 31,000. Now it's around 29,500. We got 500,000 traded on Friday, so we'll have to see. But yeah, I'm not too worried about this. This is a call expiring in January. Got another call. This is a $25 call expiring in January. Looks like we've got $1 million day. 36,000 contracts traded on that day with open interest almost doubling, with an increase of 1,500, getting up to 143, currently at 157, so that's looking good. The next one on the list is a $19 put expiring in January. And it looks like this just got put on my radar because there was a more than $1 million day on Friday. But we don't know if the open interest went up or down, so I'll have to follow up with that. Another put, $24, that expires in January. Another more than $1 million day. Don't know if the premium went or the open interest went up or down, so we'll have to follow up with that. Another put, $26, that expires in January. More than $2 million traded on Friday. Don't have the open interest data, so we'll have to follow up. Another put, $35, expiring in January. We got the almost $6 million in total premium traded on Thursday, and that looks like it was just a day trade because the open interest did not change. And also with this, almost $2 million traded over here, open interest didn't change. So that is just day trading, so no big deal there. Also got a $40 put that expires in January. Looks like 16 million on this one on Thursday. But again, that's just day trading because the open interest didn't change. So, nothing too much to pay attention to there. Another one, 42.50, expiring in January. This, just looks like there's been a lot of day trading with puts on this. But it makes me feel good that, this one, looks like this open interest, this was I don't know how this translates because on the 11th, looks like 0 contracts were traded, 0 volume, but then it went down by 122. So that kind of is odd. I'm not sure about that, but maybe that was from the previous day. I don't really know. Some wonky data there. Then the $23 put, this one expires in April, so a little bit more time. Over $4.5 million traded on Thursday, and that looks like it went up, so this is bearish, so something to consider. We've also got, this is the one that I hold, so yeah, we'll see. It's small amounts of premium. We've also got the June $42 put, saw over $1.7 million traded on Thursday, but that was, again, just day trading, so nothing too crazy. Also got the $20 call. This one expires in January 16th of 2026, so that's a leap. Got almost $2.5 million traded on Thursday, and that went up by about 4,800 contracts, $20 call. So, that's bullish. Next one on here is the $15 put that is also a leap, expiring in January of 2026. Over 1 million contracts traded on Friday, but don't know if the open interest went up or down. $47 put that expires in January of 2026. We've had, looks like over $1 million day, but open interest did not change, so that was just day trading. And then finally, the last one for Intel is a $20 put expiring in January of 2027, so that's 2 years from now. And on Thursday, we got $1 million traded on it, and that went up by 2,000. So this is bearish. So good to take that into consideration. But yeah, I'm just going to come back to this table here, going over Luminar. This not exciting. I did switch this over to the $15 call because that was more exciting than the 20, which I was accidentally tracking. But with this, the premium and the price have just come down. With that, we've seen some increases in volume, but the maximum volume is just 250, so it's not that crazy. We have seen the open interest going up, so this is net bullish for Luminar. But the did I say that this is the LAZR $15 call that expires in May? Let's see. The max here is about 12,000 in premium, so it's really not that much, a little more than just a degen YOLOing, so nothing too crazy. And the other contract that I was following because I thought that price might go down to 6 was a $6 put that expires in May. That's just had very little activity, so you could have made some money swinging it. Maybe I could have bought back here when I first started following it, but I don't know how much it would have cost because there were no exchanges. Maybe I could have just placed an order at, $1, and then maybe I could have swung it for, 186. So that would have been nice, but yeah, I didn't do that. See a spike in volume corresponding with a spike in open interest, but that's just a spike of volume of 10, only 11 open interest right now, so pretty small. Total premium, only $2,000. So this is, you can't really do much with this, but I just think that this is kind of an interesting one. I want to be following it. Don't plan on trading it until something really stands out with it. And this one is, the chart. It's, flirting with 5, hit a low on Friday of 521. I think it'd be funny if it hit a bottom of $4.20. But, that would also kind of suck. But there are some gaps to the upside around 15 or 1470. That's why I picked that strike. Also got a gap up here around 21. So some levels to consider there. But if we do look at the data over here, it looks like there are some other contracts that stood out to me. This is a $9 call that expires in May. I'm not really sure why this one stood out to me. This is the 1 day. But look at the 30-day. There have been some, 95,000 premium. That's the largest volume day. I guess, $113,000 in premium, total premium traded on the day. And this is a call. And so that went up, from open interest of 1,014 to open interest of 2,014. So this is bullish, but it's just not tons and tons of money. It's not $250,000 at a minimum, so take it with a grain of salt. These other ones that I've gone over, the 15 call and the $6 put. There's also the, $5 call, which is a leap expiring in January of 2026. And it looks like a good amount of volume traded on Friday. 2,000 contracts traded. We don't know if the open interest went up or down following that, so we'll have to wait until Monday to get that information. But yeah, this is effectively $500,000, and if that's going along with it, which in all honesty, because the open interest was only 10, this is bullish. So these leaps, $5 strike with price being right around $5, these are in the money calls. But yeah, why would somebody be putting effectively $5 million on this? Yeah, I think this is just these are in the money and they're expecting them to get deep in the money. So this is actually an interesting one. So I write stuff in my notepad, but then I don't really ever refer to them. But yeah, the LAZR $5 call leap, I'm interested in that one. Probably wouldn't buy it or, not just yet, but I'd like to see how that data evolves. So that's pretty interesting. Coming back to the table here, let's look over at MARA, Marathon Digital, ticker symbol MARA. This is the $35 call expiring in March. This one's a little risky for me because I like to do, at least 6 months out into the future. But I had been tracking this and I didn't want to spend the extra on a contract that expires in June. And so, looking at this, I am an idiot. I placed an order at 269. That being the idiot, incorporating 69 cents into that. And that got filled. Let's see. I think I placed the limit order at 269. It got filled. That was on Thursday. I could have had a lower fill. I could have had it at $2. And then so I just tried to get my average down the following day, which I actually placed on Friday in order to buy at 169. But then kind of towards the end of the day, it's maybe the bottom's in or that's not going to get filled. So I'll just get another one at 186. Just thinking that, because the clock's ticking for this contract, maybe I want to just kind of be a little bit more aggressive with the buying so I can just get out of it sooner. And so while I do have these, effectively my limits placed here, I might actually adjust those to just taking profits at 10% just because, March is not too far away. So I might want to take that risk off the table, but I would add another contract at 269. Don't have the order placed, but I do plan on placing it once the market opens. It is marked by cyan down there. But what we can see with the data, we got these big spikes in the volume, which correspond to 2 million, $3.5 million. Open interest has just been going up. We did see a spike in volume here, so I'll have to see, if what that looks like on Monday, because we saw, a decrease in the number of calls here. So it looks like it went up, but then I guess pulled back a little bit. So that'd be open interest. Yeah, so this pulled back a little bit. But yeah, we see this volume just going up. So I wonder if it's going to be more buying or more selling. So that'll be interesting. And actually, part of the reason why I was a little bit more aggressive with this is because I feel like a lot of times, not every weekend, but a lot of times on weekends, there would be, some more violent price action. And so Mara would like gap up. And so, I just kind of wanted to be in this, take advantage of getting my average down, which is now at 228. But yeah, this could be a loser for me and be losing more than almost $460 if it went to zero. But my plan is to not hold it until March. I might just take profits 10%, But let's look over at the chart. And so kind of the reason why I was thinking, well, maybe I should be a little bit more aggressive right now is because I've got this Fibonacci retracement here going from this low that was hit on September 6th, going up to the high that was hit on November 29th. And from that, we kind of pulled back to 618. And so I'm wondering if that might be holding as support. I was also kind of hoping that this purple uptrend would be acting as support, but hope is a 4-letter word. So, I'm hoping that we get a bounce here, but if not, I'd definitely be getting much more aggressive if we came down to the 786. And that is around 1683, currently trading around 20. And that would also correspond with this yellow uptrend that I have drawn there. So yeah, I think that this could be going lower, but if it doesn't, I kind of want to take advantage of that. But yeah, Bitcoin's crazy, so who knows what's going to happen with it. And then just coming over to the data over here. Oh man, I got a lot of contracts to look at. So let's see, the one that I am doing is the $35 call expiring in March. And so that is this one. I've already kind of gone over that data with you guys. And let's see. Sorry, my neck's cracking and stuff. Let's just look going down this list. I got some that, already expired, so I'm just going to skip those for sake of time. Sorry about that if you're interested in them. But yeah, I'm going to have to refresh this to delete that. Okay, and so the one that expires this coming Friday, December 27th, this is the $20 call that expires this coming Friday. And we can see that there's kind of this alert here. And we have, more than $1 million traded on Friday. Oops, let's see. And so we'll have to see, is that open interest going to go up or down? I'll have to follow up with that. The next one on the list is, again, the $20 call, but this one expires in January. And we've had, multiple more than $1 million days. This one back here on the 13th, it looks like there's a volume of 3,400, and that, there's volume traded on that day, 24,000 in open interest. That went up by about 2,000 to 26,000. Then almost $5 million day the following day, and or the day after that. So there's a 1 day of lighter volume, right here, 618. And so then the following day, we're still around 26,000 open interest, got volume of 7,500. The open interest again went up by, more than 2,000. Right around 2,000, more than 2,000 here, contracts, and then, with less than $1 million days, but it's just been going up. So this is bullish. This is for January, so this gives me a little bit more confidence. But yeah, I mean, $1 million in the Bitcoin world, it's maybe not so much money. But yeah, with 1.5 million traded on Friday, I'll be interested to see if this open interest has continued to go up from, back here around 24,000 up to maybe around 30,000 or maybe 35,000. That would be awesome. The next one is a $20.50 call. This is also expiring in January, but on the 24th. And it looks like we got a, almost $4 million day. Got a volume of nearly 5,000 contracts, and the open interest went up by, about that much. So this is bullish, so that's good. Makes me feel a little bit more confident in my position. This is actually probably what gave me confidence to, be a little bit more aggressive with getting my average down and stuff. This one's a $30 call that expires in March, so it's very similar to the position that I have, but there's a little bit more money traded on the one that I have. There's some $1 million days back here, but nothing recently. But if we look at that other contract, the $30 call that expires in March, got a $1 million day on Friday. Don't know if open interest has gone up from that, but these other $1 million days, yeah, let's I want to keep all this. So I'll scroll from up here, I think, to get that. So yeah, I mean, this started with an open interest of around, less than 24,000. And, now it's a little bit over 24,000. So I guess a lot of this has just been trading. So this is not necessarily bearish or bullish. It's kind of neutral. Here we do have a $20 put that expires in March. I guess that got put on my radar because of this over $1 million day. Volume of over 3,000 contracts. But following that, the open interest went down from about 5,500 to about 4.4 thousand, a decrease of about 1,000. So this is actually bullish, even though it's a put. It's bullish because we're selling the puts. And then $35 call strike. This is for June. This is probably, the time frame I'd be more comfortable with, but I just don't want to be spending, $300 on one contract. I'd rather be spending, half of that on the contract. And so with this one, we can see that, over $1 million day on Friday. Don't know if it went up or down, though, so we will have to wait and see. And one thing that I did not mention, why did I pick 35? I think probably just because of the high over here. That was the high in February of 2024 of this year. So, maybe we could be getting back up to there. So that's why I chose that strike. And coming back to the list over here, NIO, super excited, super bullish about this. I just think that, China is going to be releasing some more stimulus in January, if not before the end of the year. And I think that's going to send Chinese stocks higher. And so NIO is the one that I'm playing. And so this one, I believe, got put on my radar. This is the NIO $10 call that expires in May. I believe this got put on my radar because of these $1 million days back here. Let's see. Yeah, it had to have been, those over $1 million traded on those days. And, so I have a small position, just 3 contracts. Oh, well, no, looks like 4 contracts. These are the increments that I would, trim that at based on my thesis. And I do have a limit order placed to get another contract at 25 cents. Has not yet gotten filled. I do believe, at least for some of these days, I had that placed. Definitely Friday, and that did not get filled. So we'll see. IV is a little high, but I think that we could be seeing this move. So I feel really good about this one. We do see this spike in the volume, and that corresponds with a spike in over $1 million, and that was like multiple days. So yeah, that looks good to me. The open interest did go up and has more or less sustained up there since then. So that is bullish in my view. The one that I'm pretty heavily invested in is the $8 call that expires in June. My average is about 51 cents. And this one, I've been tracking this one for, basically since September. Let's see, when did I buy my first contract? Looks like it was October 15th, just a bit above Ed's head there, you can see I got a contract at 90 cents, got my average down to 51 cents, and I'd add another contract at 40 cents, but I don't have an order placed for it. But since it is cyan down here, I would add, I will place that limit order before market opens on Monday, unless something changes. But yeah, so I'd like to get the average down on this. And this is one I've been tracking for a while. Saw this big spike here in volume, which corresponded to $250,000. And so that was on my radar. And then the open interest has just been going up since then. The IV, the implied volatility, is a little bit lower than the other one, so that makes me feel good about this one. And I'm just going to make sure. I like to have the date highlighted on these. So just coming back to NEO, let's just look at the chart real quick, and then I'll go over, I think I have a number of contracts to, give us some more information. And so, yeah, we got this big move here, and that was because China was releasing some stimulus. And so we got this big move here, kind of like a pretty sharp falling wedge, broke out, now effectively kind of retesting, this trend line. So I'm thinking we might be finding some support right around where we're at, but maybe it does pull lower. It could go, to lower than like 428, which is the low from November 27th. But yeah, I think that this is going to be going up to around $8 a share before June. So I feel really confident in this one. This is going to be, a very proud trade for me if it plays out well. I'll be able to make a lot of money with it. So I'm excited about that. And, I've gone over a number of times in videos why $8. And I guess I don't have an alert up there. But yeah, that's where I think it's going. And so let's just look at some of the data, like all these contracts here. I'm just going to go down the list. Here, the first one is a $4 call that expires in January. And from that, we can see nothing in the millions, but we do have, $500,000 traded on Thursday. And from that, volume of 8,000 contracts, and the open interest went up by about 5,000, going from, this is bad luck, I'm not going to say those numbers, but around 23,500 going up to around 29,000. So that's looking good there. And then the $10 call for May, it's the one that I have a small position in, got these $1 million days back here. So that's kind of why it's on my radar. And from those, open interest has gone up. So, feel good about that. The next one is the $5 call expiring in June. And this is on my radar, I guess, because of this $1 million day here. And, that was 10,000 contracts traded on that day. It went up from, 19,000 up to 29,000. So that's bullish there. This is the $8 call, the one that I hold. That's, not that exciting, but, I don't have to be in the sexiest of ones. That's fine. I think people will flock to it, when it starts taking off. And then I'll start trimming, taking profits, and I'll be making some good money on this for me. But, maybe it's probably not nothing too notable for most traders, but, I'm learning. And then this one is a $5 call that expires in September of 2025. One that stands out to me is this nearly $2 million net total premium day. That was a volume of 17,000 contracts going from 7,500 up by 16,000 contracts to about 24,000 and kind of being flat around there. And so this is looking good. Also got a $4 put. This one expires in September. Why is this on my radar? Got, a couple $500,000 days. So this one, it looks like, let's see, there's 6,000 contracts traded. It went up by about 1,500. And, it's kind of stayed there. But then on this day, 6,000 contracts traded. It went up by 6,000 contracts. So, this is bearish, but it's between now and September. So, there's a good amount of time. Also, this next one is a leap. This is a $4 call, an in-the-money call that expires in January of 2026. Why is this on my radar? Because of this nearly $6 million total premium day. Went from, let's see, 26,000 volume on that day, going from 8,000 contracts to increase by almost 20,000, getting up to 27, almost 28,000 contracts, now at 28,000 contracts. So this is bullish. Then here we got the $8 call. This is a leap expiring in January of 2026. This is on my radar because, again, of a effectively $6 million day, going from 8,000 contracts. Wait, did I just talk about this one? This is eerie. Oh, okay, I guess it didn't load. It didn't load when I guess I didn't click on this. So the $8 call that expires in January is a $1 million day. Almost 10,000 contracts traded, went from 44,000 up by about 1,000 to 45,000. So, it's an increase, and it's still around 45,000, so that's not too bad. And this other one is a $12 call leap expiring in 2026. And what stands out to me about this one, I guess not really that much, is I don't really know why this is on here. I guess because this is 500,000. So yeah, but we don't have data on that. And this, not even 500,000. That was an increase though by 4,000 contracts. So that's looking good. And so yeah, I'm going to come back to this table so we can look at Plug Power. This is the $3 call expiring in June of 2025. I no longer hold this. Looks like maybe I didn't note it. When did I? Let's see. So I had these 2 down here, 3 down here. Wait. I had all of these over here. I guess, yeah, I mean, I had sold on the 13th. Why didn't I talk about this last week? Or maybe because I hadn't decided that I'm not going to follow it. That's probably why. But yeah, I'm probably going to say goodbye to this one. And the reason for that is, we have seen these nice spikes in volume as open interest goes up. The highest premium of those spikes is, around 20,000. So that's just like 2 degens YOLOing. Not a huge amount of money. And excuse me. And with this being like a $3 stock, I just don't think that there's as much data behind this. I do have shares in Plug, so I'm fine with those. I don't need to be trading calls or anything. But if we do look at the chart, this is actually looking pretty good. So I'm kind of sad that I sold these. It looks like I sold them at 47 cents. So no, I didn't include some information in this. So I apologize about that. I'm not sure. I'm going to look this up on my phone because I don't want it to pop. Well, yeah, I don't want it to. I keep track of stuff in a little spreadsheet, but I don't want it to be in the video. But yeah, I'm just going to go on my phone to pull up, let's see, my P&L on Plug. And so I just have to find it here, so give me a second. Let's see, Plug Power. I think it's one that I've net made money with, but I do have share. Yeah, those shares are in the green. Plug Power, where's Plug Power? Sorry, but I'm just trying to provide you guys with information on what I did over the past week because I'm no longer in this. Dang it. Okay, so what I might do is I might just remove my display for a second. You can see, actually, I'll just switch this over to Plug so you can see that. And then I am going to pull up information on when I sold my Plug calls. Okay, so there's 40 covered calls. I guess I have it in there. Wait a second. I'm sorry about this. Yeah, I guess I added it. I guess I did that exit call on the 13th. So that was a couple Fridays ago. yeah, so that's probably why I left it in there, because it was just so fresh. So yeah, cool. Yeah, so kept that secret, kept that safe. But yeah, so I got out of the two calls, 94 cents, closed both at 47. Oh yeah, this one, it's kind of embarrassing. I was thinking, well, if I made, 100%, about 100%, why would I sell lower? And, I just, I exited at 30% because, that was for the reason of, I just needed to get my positions down to 20 on a Friday. And, so that, selling those at 47 cents, yeah, I mean, that wasn't necessarily a bad decision. I could have made a little bit more money with it, but, that's fine. I just can't be tracking everything, and I do have shares, so no big deal. But yeah, looking at the chart, plug, I was kind of hoping that, I guess over the past couple weeks, that it'd be forming like a little bit of a bull flag here. We're kind of getting that, although we broke out higher than I expected, kind of pulled back. But yeah, we got this big, move, 11% on Friday. So, yeah, I mean, I think that this is, not looking that bad. Could be looking better, but I mean, it's like, we're clearly above this purple downtrend and, finding support over here around like 220. So I think that this is looking good. I think that we could be seeing this up to $3 by the end of the year. So, I think that's great. And, with that being said, that call would be worth more, but, I don't want to chase it. I want to FOMO back in. But yeah, it might actually look, so it was at 36 cents. I could have gotten that on, Thursday, but, I don't want to spread myself too thin. I got shares. There's just not that much data with this. And so speaking of the data, let's look over here. I just got the $3 call. Yep, 20,000. It's just, I've already gone over this data kind of in that spreadsheet. You see price and call premium going up. Let's look at this over the past 30 days. Yeah, I mean, this is looking not so bad. So, but yeah, I mean, let's just look at contracts. Just searching plug contracts filtered by net premium. The highest is 200,000, so it's not, an excessive amount of money. This is one that already expired. So, yeah, I mean, for it to be, that much premium on a Friday, the day that it expires, doesn't really tell me that much. So, yeah, I'm probably not going to follow plug anymore unless you guys want me to. So let me know in the comments if you do. But yeah, I'm just going to move on to the next one, which is QuantumScape. So this is one that I started building a position in. It looks like I got two calls right now. I got one at 68 cents. I actually had an order placed at 69 cents, but it got filled a cent lower. So dang it, 69 is funny. And then, it did pull back some more. So I added at 47 cents. My average is now at 58 cents. And if it does dip again to like 40, then, I do have an order placed now, a limit order placed to buy one more contract at 40 cents. And what we can see here is some nice spikes in volume, open interest going up. These spikes correspond with, a max 140,000, so it could be more money. But I just saw, really just a compelling case. These are links to a Bronx Viking post that I just retweeted with some thoughts on them. And yeah, and I made the video about QuantumScape. So I checked that out, a clip from a stream, I believe. And I just think that this looks really good. And looking at the chart really quick, it's past my bedtime. I got work tomorrow, so I'm going to try to rush through this. This is kind of, just taken from the Bronx Viking, this falling wedge. And, even if we take a step back further, got these other, peaks that don't make it look as nice, but, this could be breaking out. And so my call is a $10 call expiring in June. Sorry, I forgot to mention that, and excuse the throat clear. So, I feel good about that, not being too aggressive with my buys, but, I will be accumulating them. And looking at the data from that, I just got the one contract, kind of already went over the data. And so this is the one day we see the price in yellow and the premium going up for the calls, whereas it's kind of flat for the puts there. Most of the volume is calls. I'm going to sneeze in 1 second, so I'm just going to mute. I guess I didn't sneeze, but I didn't want to surprise you guys. But yeah, I mean, this one, I'll be providing more information on this as the weeks go by. If we look at this on the 30-day, just to maybe give a little bit more insight. Yeah, it's been kind of volatile, like it's trying to break out or something. and the majority of it, the price is going up, then pulling back, calls going up, pulling back, but the puts are staying kind of flat. So I like that about it. And yeah, so I'm going to come back to here, go over Rivian. Looks like I've got 2 calls on here. One is a $15 call expiring in June. This is one that I had traded. Took some profit on. I believe I could have done 100% on this, but I got out a little early, got a little spooked. And, so that was kind of like, well, I feel stupid for taking profits at like, let's see, over here. This was at $2 because now it's trading, about $2. So I could have bought back in right around there. But I have this, I'd consider, maybe reestablishing a position at 220, but I don't have an order placed on it. But I do feel pretty bullish about Rivian. Looking at the data here, we can see that the spikes in volume correspond with the open interest going up, and these spikes in volume correspond with over $1 million orders. So that makes me feel really good about this. But with the current price being around 13, 15, or about 14 really, getting up to 15 over here, I could have made notably more money. With it being around 15, I feel like I could increase that strike if I am bullish on it. And so that's kind of what I did. And so I'm surprised, I kind of forgotten about this. Just so much going on. I've got 2 Rivian calls, $20 strike expiring in June, just boosting that up a little bit. And, I got one at $1.51, another at $1.25. My average is now $1.38. For this, I'm a little more enthusiastic about it because I trimmed too early before. I trimmed this at 100 and 200% for a 2x and a 3x. I would add another contract at 110, but I don't have an order placed, and I'm gonna kind of chill before adding to it. But maybe we'll see. We'll see what happens. Things get shuffled around, but I just I think the reason why I don't have an order placed or would not be placing an order is because it didn't close at 115. That was like the low on Friday. So if I placed an order at 110, I just don't think it'd be filled. So that's why I don't have that placed. But yeah, I got 2 contracts, and this is, more than $200 into it. So, hopefully I can make hundreds of dollars. So that would be nice. If we look over at the chart, Rivian, we can see that, we got this kind of like, not parallel, but it's kind of like wedge, a little bit wonky. But this downtrend looks like it's broken out. It's just retesting. And, I think it's going to continue to go higher. And 20 corresponds with the levels around here at the prior highs here. So that seems pretty reasonable to me. And looking over at the contracts, let's see, I don't have too many, but I'll just go over them in order that they're listed here. One is the $18 call that expires in February. And why am I interested in this one? This looks like it's a pretty new contract, but we got over $1 million orders. This was nearly $3 million, not orders, total premium. So less than 3 million total premium traded on the 16th. And following that, during that day, there was an open interest of 4. And from the 28,000 contracts traded that day, the open interest went up by 24,000 to about 24,000. But then it looks like some of that was trimmed with $1 million day. It went from 24 to 19, but still, right around 20. So looking good there. This is bullish. This is a new contract. And $18. Yeah, so this is actually one that's, kind of like, in my price range, but it's just a February expiration. It's a little too close for me. I'm still getting comfortable with options, so I don't think that would be good for me. And then these other 2, contracts that I went over, there's also a $14 put that expires in June that is on my radar because of this over $1 million total premium day. We can see that the open interest went from 3,500 to around 8,000, so an increase of over 4,000 contracts. So that is bearish. So do consider that. And then this other contract, this one I believe had a lot of money behind it. The table's not updating. Let's see. I thought that there was, no, I guess not. It's just kind of, I guess this one's maybe the more active one. This is the $17.50 call that expires in September. And so on the 9th, we had a $1.5 million day. Open interest went from about 4,000 with a volume of 5,000 traded, going up by about 5,000 to around 9,000 open interest. And then the next over $1 million day, we had about 9,000 open interest, 5,000 traded, went up by about 5,000 to around 14,000. So that's bullish. And then here on Friday, over $1 million traded on that day. Open interest still around 14,500 contracts still open. We'll have to see if that changed into Monday. So yeah, Rivian, I feel really good about this. I'm really compelled by this, February contract. But, I feel a little bit uneasy with the MARA, the Marathon Digital contract that expires in March. So I think doing a February expiration would be a bad idea for me. So I'm not going to do it. And then coming back here, let's look over Tilray. This is one I closed my position on. Unfortunately, I just think it's a little too speculative. And, it did go lower than, I expected. I expected it to bottom around 142. And it's been, lows of like 116. And so I just felt like it was just a little too speculative, a little too risky. And so for me, I just wanted to take the risk off the table. It's all about managing risk. And, I don't have to be in every stock or all the stocks that I go over. And so this is one I just didn't think it was worth it because my goal is to make money, not to hold stock. So just want to take the risk off the table. So as you can see here, that's what I did. Close my position on that day. And it looks like I sold 3 at 19. So I made a tiny bit of money, about $10 total, less than 10, about $10. So it's not nothing, but it's not something crazy. But yeah, what we can see is spikes in volume. They've corresponded with like a maximum of less than 35,000. Open interest has been going up, but IV is kind of high. So yeah, I just didn't think it was worth it. And I just didn't really find that much data on Tilray. If we look over at the chart though, yeah, this broke below of this wedge that I had drawn. So, I feel like this is dip buying opportunity, for Tilray, dip buying opportunity in its history. But I just, as far as managing risk, this it's just too risky for me. I had this level marked and it's below that. And so, yeah, I feel like this is definitely going to be going higher, but there's just not enough options data. And by going higher, I think it could be going to 2. I think it could be going up to fill these gaps around 260. I think it could be going up much higher than that. But those are just the levels that I've marked right now, being that they are gaps. Looking at the data over here, excuse me. Now this is just the contract, that I went over. And just scroll down here, premiums, 5 digits, I want to see at least, getting into the 100,000s, and we're not seeing that with this. It's a cheap stock. So, it's not too surprising if I do search for other contracts. I think this is probably another reason why I was not so interested in it. This is by highest volume, so I'm going to sort by premium. The highest premium traded on Friday was like $50,000. It was not one that expired, on Friday, so that's good. But yeah, it's just not enough money. It's just not enough data for me to be tracking. So I'm not going to be tracking anymore unless you want me to. So let me know in the comments. And then, I'm going to get into the last couple on here. So one is Unity Software. This is kind of like my baby because I've tracked it a while. I just haven't traded it that much. But excuse me. This is a $30 call that expires in June. And so this is kind of one that I have just been watching. And yeah, I mean, I was putting out videos that came out in June about it. Unity Software is in dip buy zone. So yeah, that's pretty cool. But I've been just disciplined, waiting for my level to be hit, which is $2.50. Which it's just about there. The low on Friday was $2.54. So, will be nice if it came down lower, but I don't have an order place to limit order place to buy because, it could be going lower and I just don't need to be spreading myself too thin. But what we can see in the data here is some spikes in volume that correspond with, $1 million trades. So that's good. We do see that open interest has gone up. And the implied volatility is, less than 100. So I think that's good. So this is one that I'd really, in all honesty, I'd really like to get filled. But if we look over at the chart, let's see. It had previously pulled back to like the golden pocket here, which is, the 618 down to the 65%. Made videos on that. Bounced from there. We are now from this run up at the 618. And so I'm kind of wondering if that could be holding as support. But then from this channel that I have drawn there, we see the midpoint of that channel is where the 786 is, and that's around $20 a share. Do have an alert at $20 a share. So, if it dips to my level, I'd consider adding to it, $2.50 for that contract, but I don't have to. And, I was too early over here, and then I sold too early. I didn't ride this up with a different call. That was a $45 strike, expired in January, so that was just too ambitious, I think. But I think that this could be bouncing, and so if that contract comes down to 250, I'd like to have that filled. And the reason why I picked 45 before is because I kind of this level up here based on that high there. But 30 I think would be coming up to this kind of downtrending parallel channel here. This is like around 36, so 30 is kind of conservative. So I'd feel good about that. And if we just pull over to the data, I've just got one contract. It looks like the one that I'm interested in. And there's been some $1 million orders in the past, and the premium, or the open interest, I should say, but not $1 million orders, $1 million premium, total premium. Sorry, I keep saying that. But the open interest has been going up following those big order days. If I look up other contracts, I'm sure that we can see some that have had some pretty high premium, but yeah, not $1 million, 410,000. This is a call, $25 call that expires in June. So that's actually kind of similar to the one that I'm following. So that's, kind of interest. If we look at the 30 days, we have seen some pretty big spikes. This day had, over $500,000 in total premium on it. And I like Unity Software. This one, because it's a lower strike, though, it's just going to be like the low on Friday was about 400, 399 here, whereas the one that I'm tracking, which is the $30 call, both expire in June, it's 250. So 250 versus 400. So that's just kind of, for me, I don't plan on holding until expiration. I plan on trimming. Or exiting well before expiration. And then finally, I'm just going to go over to volatility index, which spiked. I was holding UVIX. I sold at my level, being fairly conservative. I made $50 on it, which is not a crazy amount, but I also had what was in that position, so I had more money to then buy the dips of other things, so that was nice, or at least just feel a little more comfortable. I had some cash on the side. But I made 50, I could have made, I think, 250. But that's how it always goes. And, I managed risk and I made money. And so I feel good about that. But yeah, and volatility index, spikes up and then spikes back down. And that's, kind of what we saw over here. It's still elevated, but it has pulled back. And so with this, what we could see is there have been some spikes in the volume going over, $1 million. So maybe that was a tell. We see the open interest increasing. Here we see this big spike in volume that corresponds with over $4.5 million. And following that, the open interest went up. But for me, I feel like that was a take profit kind of thing, but this is also a $25 call that expires in February, so there is some more time for another spike. What we can see in the data here is, yeah, there's a big increase in the open interest. So Wednesday, we had 37, almost 38,000 contracts traded. That resulted in an increase. And then this 2,000 contracts resulted in a decrease. Still plenty of contracts held, even though I think it's probably going to be cooling off. So I think that money was to be made, and now I think it's probably going to be cooling off some. So yeah, there's that. Looking over at the data over here, I've got the VIX. This, you know, the thing that really stands out to me is over here when we had this big move. That was, I'm sure you probably heard about this. That was a 64.9% move on that day, but there were other big days leading up to it. What we saw on Wednesday was an increase of over 74% in one day, closed at the high, so there was more opportunity to sell during pre-market, but not with the VIX here because this is only during market hours. So it did pull back, went up some, and then now, you know, that was the time to get out in my view. And so what I traded was the UVIX, and for me, it was not too exciting. I'm kind of embarrassed by it. I just took a 10% swing. I think it was around, I think 411 is where I took profits, and that was 10%. I could have, done, I think 50%, but, it could have pulled back. There was a big wick here. So yeah, I mean, I just, did what I needed to do, and, I feel good about it. I was just a little bit concerned because we had kind of changed this like regime being below this yellow downtrend, that we might not be getting up to it. And so even if I would have done like 469, I think I had talked about that in the past, just being an idiot, thinking it's funny. Yeah, I could have done that, but instead I just stuck to it. Rather than trimming out of my position, I just exited. And part of the reason for that is because I had trimmed the UVIX in the past, but then I'd always be holding like 10 shares or something. And it's like, no, I'm going to kind of respect these green and red boxes. And so we've had the green move in my view. And then so now it's effectively like I'm going to wait for basically another week for us to get over here. And then I'll wait 2 more weeks for the next red box, and then, I will establish another position for another spike, 10% move, whatever it is, short-term swings. But yeah, just looking over at the options data for the VIX, this is the contract that I've actually, no, this is not the contract. The $25 call is the one that I've been tracking. The data, I kind of already went over that. $18 call, I guess this one had $10 million traded on it. And that went, open interest went up. And yeah, I guess it's still been going up. This is also expiring in February. But, I'm tired. And so I think I'm going to wind this down on that note. Oh, but I have to come back to here so we can do Grok's 10 premium picks. I can't forget to do that. And so let's go over to... I've already got it typed in there for us because I didn't want to have to fumble with it. And so I'm going to ask Grok, can you name the top 5 stocks that had the maximum amount of options premium traded on December 20th, which was quad witching day? So let's see what Grok has to say about the top 5. He'll provide a little bit more details on these than just doing the top 10. So I will follow up with the top 10. I guess he didn't provide that much information. He had provided more details in the past. But anyways, for these, looks like, wow, Nvidia, not 1 million, $1 billion traded. SPY, almost $1 billion traded. So number 1 is Nvidia, then the SPY S&P 500, then Tesla, then the QQQ, and then Meta. And then I do tend to follow up with how about the top 10. And so Going to be Nvidia, SPY, Tesla, QQQ, Meta, also the IWM, Apple, Broadcom, AMD, and Micron Technology, ticker symbol MU. And Broadcom is AVGO, Apple's AAPL. And so with all of these, maybe these are some to be of interest. But anyways, with that note, I'm going to try to put some timestamps on this. And then I'm going to get to bed. But yeah, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys. Hope you have a great rest of your weekend. Cheers.